invest it, and go to sleep forever, you would get about $40,000 every year.
Okay, I know that sounds crazy, but it's actually true. This is exactly how millionaires become millionaires and billionaires become billionaires without actually having to do work. Pretty much all of the world's wealthiest people get that way through investing and by utilizing the compound interest effect. Let me explain. Compound interest is basically just the money that your money makes without your involvement. Basically, when you buy an individual stock or a group of stocks like an ETF or an index fund, you're essentially buying a partial ownership within that company or groups of companies. And you won't actually get to manage the company or tell them what to do, but you still own the company, at least on paper. That's how stock market investing works. You give a company money by investing in them, and in exchange, they give you a partial share of ownership in their company, and you can do whatever you want with those shares. And over time, most stocks tend to go up in value, which is called appreciation. But if the value of a stock goes down over time, that's called depreciation. That's how stock market investors make money. They buy a stock at a low price and then they sell it later for a profit. In the video, he discusses getting an annual interest of around 10%, which basically just means that your money is gaining 10% in value every single year. That's 10% based on your initial investment. So if you invested around $100 into an ETF, index fund, or an individual stock and your annual interest rate was around 10%, you'd be left with around $110 after your first year. If you want to see this in action, the US government and the SEC has a super awesome calculator that'll basically lay this all out for you. Just type in your initial investment, the amount that you'll contribute each month, the length and time in years that you'll contribute for, and then your estimated interest rate, and it'll basically show you what you'll have after that length of time. So just like he said in the video, if you were suddenly given $400,000 and you contributed or invested nothing after that, and you had an annual interest rate of around 10%, after 40 years, you'd have $18 million, which is this red line right here. Like I said, that's from doing nothing except for investing that $400,000 into a stock or an ETF. This is how the richest people in the world become wealthy and stay that way. They make an initial investment, and because of the compound interest effect, they allow their money to make them more money. As their stocks appreciate in value, they just hold on to those stocks for the long term, or they sell those stocks at a profit and then reinvest their earnings. He mentions in the video that wealth is sometimes inherited or given, but that's not always true. Some millionaires are self-made, and you can actually use the compound interest effect to make yourself wealthy too. We're going to use that same calculator as before, but this time your initial investment is $300 and your monthly contribution is also $300. If your estimated annual interest on your investment is around 10%, after 40 years you'd have around $1.6 million. And trust me, I understand that $1.6 million is definitely not the same as $18 million, but in order for the compound interest effect to work and for you to earn more, you have to invest more. Just because you're not wealthy today does not mean that you can't be wealthy in the future. You can become wealthy by just investing what you can today and then staying consistent with it over time. Remember, you yourself can only work so many hours a day, but with compound interest, your money can work 24/7, 365.